All right, welcome back. Let's do some calls of the day. We're starting with Bank of America today. Downgraded at HSBC. That's to hold from buy. Mike Mayo has raised his price target, by the way, at Wells Securities on Bank of America by $4 to 44. So it is up 44% as well from the October 27th low. Nobody owns this. You got JPM, though, which has been a stalwart.
Yeah, I mean, it's the best of the group on many levels, almost on any time frame that's like reasonably long enough. The stock has outperformed. Nothing against Bank of America. Technically, it actually looks great. And I think a lot of people can make money in a lot of these stocks. The banks have actually been the big laggards amongst the financials. The insurance companies have acted better. We've seen like a lot of outperformance relative to the banks, but now the banks are bringing up the rear, and that's okay. Maybe it's that time in the cycle for them. So I don't think you need a rate cut here. I think similar to the rest of the market, the promise of a rate cut is good enough for right now. And these companies, they've gotten rid of some competitors. A lot of the flows of money have gone their way because they're considered to be safer and more stable. So they've won already on a lot of fronts fundamentally. Now the stock's starting to work.
All right, how about Oracle added to the fresh money list at Deutsche? Jimmy, buy 150 is the price target.
Yeah, this is a place to put new money right now. If you're wondering where in the markets you can put new money, this is a place. Now, I'm not saying it can't go down next week by 3%. If it happens, just leave me alone. For the long run, this is a stock that's trading at about 20 times forward earnings with the sentiment. So both the fundamentals and the sentiment is behind it after their Q3 report. Building data centers like crazy to support AI and cloud computing. You know, this is a stock that underperformed technology for the last 15 years and now is rapidly catching up. At the very least, stay out of its way. But if you have money to put to work in technology, this is the place.
If it goes down 3% next week, can I give you the business?
This is how it works? I give you permission? Is that how this works? Well, you
just said if it does, leave me alone. I'm like, I mean, I'm not agreeing to anything.
I know you're not. I was just checking. What is it, opposite day or something?
All right, I don't know. Abbvie, what about that? JP Morgan reiterates that as overweight. You own that.
Yeah, it's a beautiful healthcare stock. They've made some key acquisitions. First off, very attractively priced, 16 times earnings. It's got a nice dividend yield. They've made some attractive acquisitions right now. A lot of money coming into healthcare space. Again, this is one that you really shouldn't worry about. And if you have new money, you can put it to work here.
All right, what about healthcare? Yeah, I mean, Pfizer, which, you singled out a couple weeks ago.
Yeah, look, healthcare is really multidimensional. It's really tough to make a broad call on healthcare, period. It's not like the energy stocks where they're unidirectional and mostly behave in line with what the commodity does. In this particular case, you've got all different reasons why different sectors might be under or outperforming. I do think broadly the fear over GLP-1 or the excitement over GLP-1, depending on which stock, I think that's probably been overdone. It's going to get very competitive, even if you think it's a huge business. It's not a slam dunk to just buy any company that has a drug in development for that space. By the same token, a lot of stocks have been ignored by investors because they're not working on GLP-1 drugs or they haven't gotten far enough. And I think that's the case with Pfizer. Stock has been left behind by the group, been left behind by the market, one of the worst performing names over the last 3 years. I don't think the fundamentals are as bad as where the current valuation is. I'm a buyer here. It doesn't look like most of the stocks I normally talk about. I usually prefer the 52-week high list. This is on the 3-year low list. But I'm in here, and I think things could turn in the second half of the year.
Speaking of healthcare, UNH, Jimmy, that's let you down. It's down 6.5% year to date. It's only up 4% over a year. We all know what the market's done relative to that.
We do, and there's two things facing United Healthcare. One is this data breach from a few weeks ago. It's going to cost them some money. Now, they've already announced I think it's about $3 billion. They've already announced it. The market does want to get past that. It wants to get past the second issue, which is medical loss ratios, which are higher than expectations. In the upcoming earnings report, and they're an early reporter, let's look at those medical loss ratios. That's the real story. The data breach is awful, but it's behind us.